to PlusFX Interactive. Now today I'll give you a short tutorial on support and resistance lines. Now I think these are the most important analysis and the most important indicator, and to be fair I think this is probably the only indicator that you'll need, but that's just our opinion, and these are what we use for the majority of our trades. Okay, now here we have a chart of the euro against the US dollar. Now, for starters, a support line is basically a line, a point in the chart where the price touches several times and basically uses it as a support. Now, from support lines we can predict where the price is going to go. Maybe if the price is approaching the support line, we will think that maybe the price will touch the line and then bounce straight back up like it has done in previous times. Now I think the most important bit of information that we need to take from this is that support and resistance lines are not specific points, they are areas. So when we draw our lines, they may not touch exactly, they might be off a little bit or go past a bit, and that's the whole point of these lines. Now what we do is we take the lowest low, which is here, and then we join it up with another low. There we are. There we are. And there we have our support line. It's cut there and there. And you can do this in many different ways. If you want, you could do it at the end of this candlestick, but we prefer to do it roughly in the either in the middle or at the bottom of the actual opening price. And from this, you can see if the price does start to approach this line, we will consider maybe that the price will bounce back and shoot upwards. And on the other hand, we have resistance lines. Now resistance lines are similar to support lines, but the other way around, where instead of going down to touch it, they go up to touch it. Now here we have nearly three. We have one here, the second point there, and the third point there. We're going to join these two. Carry that one bit. So there we are. And there we have a resistance line. Now at the moment, as you can see, the price is in the middle of them. So if we were to enter the trade, we would not enter it right now because it's unsure. We're unsure of which way it's going to go. But for instance, say it did start to approach this line, we'd think maybe it will retrace backwards. So what we're waiting for when it approaches the line is very strong bearish candles to imply that the price is going down. However, if the price does break the line, remember that for it to be a valid candlestick, it must close. So as you can see here, maybe halfway through the day, it actually broke the support line, the resistance line. Sorry. And if you would enter long, as soon as it broke it, you would probably be stopped out because it dropped quite a bit. Whereas what you want to do is you want to wait and for it to close there, and it closed above it, and then wait for extra confirmation for it to be going upwards. And the same applies for a support line, obviously. So that's the basics of support and resistance lines. And our next tutorial we'll talk about the Fibonacci lines. Thank you.